Hello, everyone, and welcome back to the J22 Report. I am your host, Johnnie Market. You all know that drill. Smash that like button, subscribe if you already haven't. Just a little disclaimer, nothing should be construed as financial investment advice. These are just my thoughts, opinions on the markets, what's going on. And also, if you really like it, share it. So any support, be appreciative. Let's get into today's stuff. I took Friday off. I was pretty exhausted. And the data, nothing big. Fed propaganda, also known as speech, and Hughes count. But in terms of the market, a couple of things I wanted to talk about. First thing is the Magnificent Seven. If you look at this drop, this is a pretty big indicator. We haven't seen a drop like this in a while. If you look at this is just from January 2024, and it went. Look at this. Almost up to here in market cap. 18.4 trillion. Now it's around 15.1. That's a pretty big it's a pretty big drop. That's over 3 trillion. 3.3 trillion. I don't know what it is because it was a little bit up today. But if you look at this, which I'm actually surprised, Apple 3.2 trillion. Tesla really took. But yeah, that's quite a big drop. As you can see, these are leverage plays on the upside. But now that they're tanking, they're also leverage plays on the downside. And when they're going down like this, I think this is not saying it's going to go straight. Like if you look at this, it went up here, started at 11.8 trillion, went to 14, back to 12.9, up to 17, 14.1. So as you can see, non-linear, they don't go straight up, and fractal in nature. So it could go down, come up here, and then just sort of make its way down. So anyway, and that, look at that. That's a support. That's a trend line right there. Comes in, test it, goes down, then finally breaks it, comes back down, test it, breaks it, sort of test it, and then rolls over. So who knows? Maybe it'll come back and test this and then go down. So I'm not a technician. Don't pretend to be one. Don't know how exactly this is going to play out, but if you look at, even if you go here, you can tell it's sort of breaking the trend line. If it's like you go, let's say it starts here, goes all the way. I'm just going straight. I don't know exactly, but you can tell even if it just goes. I'm trying to go as low as possible. And you can see just going low as possible, you can see it broke down. So maybe it comes up and then breaks down again. Who knows? But based on this, it's probably broke multiple trend lines. So you can see the Magnificent Seven is now the Press Seven. I don't know. I actually had a cool thing for it. But no longer. This is another thing I found interesting is everyone talks about Michael Blurry. But if you look at this, big short investor who predicted the 2008 says the market is underestimating the impact of Doge spending cuts, which, as I said, this economy is built off government spending. It will really tank. But here it is. Let me see. See, it is Danny Moses. So Danny Moses, big short investor. He's talking about how the market is really in trouble. Of course, where is Danny? They don't show him, they don't really show him in The Big Short. I think this doesn't, they should show, let's go to Danny Moses. I'm going to do the movie character, and I will show you. See, this is Danny Moses in real life, but let me find him in The Big Short. All right, here it is, The Big Short. Right, they can't just. Uh, right here. So this is his character. I don't know if you remember it, but right there, that's his character in The Big Short. That's his character. And yeah, he's worrying about the dangers now. So, not just Blurry, Michael Blurry, the whole Big Short team, maybe they're going to come back for one more row. So, this is also another big thing. And this is what I talk about. And this is why we're going to be Europe, Canada, North America. A lot of these, not Mexico. Mexico's pretty nationalistic as is. But Australia, a lot of these countries that were pretty much almost basically the West were denationalized and would invest in US. They're rediscovering their nationalism and they're not going to be investing in the US anymore. That foreign capital that we've been getting, not even during World War II, but even just during the 1800s with Britain investing with us, Britain trading with us, and France and all that, it's going away. And so here it is. Foreigners are dumping U.S. equities at a record pace. U.S. stock funds saw over $5 billion in net outflows last week from overseas investors, third largest withdrawal in history. This was only below the 2020 crash and the March 2023 banking crisis. Notably, foreigners held a massive $16 trillion of U.S. stocks in quarter four of 2020. So, in other words, there's more selling to come. And so here it is, March 20th, 2023, 2025. So you can see that I am on Substack too. So if you want to, this is just, but yeah, I mean, that's one of the reasons is foreign buying has propped up this market. And they're going to start selling because they're upset with what's going on. And this is going to hurt the market. I just thought this was interesting. And you can tell when I say Apple's losing 1 billion a year in streaming service. I mean, I don't really, I know about Apple TV, but I didn't really like their streaming service. It's like not too much. I didn't know what I got. And it was $9. I mean, what Apple would, if they were smart, what they would do is just buy up regional sports networks and whatnot and just create one service for sports. That's what I would do if I were Apple. Anyway, let's get to gold. So as you can see, gold, as I called it, 3,000. It's going to go to 3,000. And silver's the next selling target. We're going to know if we're at a turning point is when silver gets around 50. I think that's going to happen. But in terms of gold, let's see if we can actually get a chart a little bit. I'm not a technician, but just so you get prices. So this is all. See, that's another reason this chart right here. If you look at that, that's just straight up line. And that's why I think when you see something like that, there's some sort of correction. See here, there's a red dot, there's a red. And this is like on a 5-year basis, 2000, 2000, then it comes a third time. And then the fourth time, so you know it's not coming. And it just went up. Just went straight up. A little bit up, a little bit up. And so that's why I think it would come down. And where I think it would come down to is like maybe 28 or 27. Now, it depends how long. I think if it just sinks here for months on, if it just comes down to 29 and just sinks around for 4 or 5 months, I think there'll be a massive stimulus, huge stimulus, and gold's just going to skyrocket. But if it doesn't go down like the 28 or 2,700, I think it will be like a 6 month. But if it comes down here like to 2,400 real quick, I think then it will just come right back up more. It might come to 24, 26 and just slowly and then break out the next time. I don't know, but the main reason I sold is and got rid of some debt. I'm not all that worried, but I saw this and I was like, it's gonna. But the good thing is, like, you see a lot of red here, so you can tell there was corrective. But I saw that and I was like, whatever loans you have, just and look at that cup handle, boom. So, uh, so let's go back to the gold uh bull markets also to give an understanding. If you look at it, 2006, 2008, it went up to 1,000 and it bottomed around 600, 700. And then around 2009, it broke out to 1,000 and it went all the way up to 1921 or something. And it ended like around August of 2011. And it started like the breakout started in 2009. But this also came from 2000. That's when the bull market started. 2006, 2008. And if you look at it, this is just a big move up. Then it made another big move up. And so this is just a straight line going from 600 to 1,000. That's around let's see, 600 to 1,000. So 400. This is like a 60% move. This is about a 30 or 40. So what I think is, I think this is more the move here from like 2000 to '08. I think this was the first because this is where it topped in 2020. So if you look at it, top here, and then it broke 1900 to 1,000. What was 900? This is about a 90% move. So I think the top is probably somewhere between, depends on what this correction is. But in my opinion, somewhere between, I say 32 to 3,200 to 4,000. Now, in terms of gold, why do I say silver at 50? Because there's a couple of things I want to look at. When this market topped, the junior stocks were at astronomical highs. Let's look at one. I'm going to look at one. I always crush this. I don't own this anymore, but we'll just do Bear Creek as an example. It's at 14 cents today. Now, it's not as good as that other company, but you look at it at the top, it was at $10 a share. Now it's at 14 cents. Look at 2007, it was about $8.53. Even in 2016, that was at $3. 2020, that was around $2. So if you look at it, even there's no. I want to see SILJ. These are junior miners. I don't know how long this has been, but no sign of a top that. And if you look at it, see this started in 2012, but even then, 2016 when that was the topping, that was at 18, nowhere near there. top in 2021 was at 17. So this is at 12. So I look at the mining stocks, even if you just stack, look at the mining stacks for I want to see the miners do really well. We need that sort of euphoria. And I'll just do GDXJ, even though these are mid tiers. If you look at this at tops, 2010, that's at 156, nowhere near there. It's not even close to the 2020 top of 60. Now, and actually it is close, but I think this is going to break out and come up. Uh, GDX, just go all. I want to see GDX around here, 58, which is 10 to $15 higher. It is going towards the 2020 top, but I think there'll be a big stimulus on. So some of the miners, but the miners were not that profitable during this run. And a lot of these mining things, let's go to Newmont. This might be a better one because a lot of these were not around during the bull markets to give you good comparisons. Now, the 2022 top, this was at 77. The top in 2011, that was 68. Newmont's at 47. So I think Newmont's a good one. 76. So 76. So Newmont gets to 60 or 70. I think that will be a top. And then let's see. Barrick. This is not all that great, but yeah, I think gold can go anywhere. So you could really correct back to 2400, but then I think it'll 32, 3500, but I don't think it'll correct. I think 28 and top will be, but just my opinion. But my main top now, and this is when I will probably be lightening more of a load, whether it's buy a house or not, is silver. And I want to see silver around here before I know. I think silver is at 34. And on a long term, I don't know what the rules are on triple. I think if it breaks, I say this ad nauseum, doesn't break 50, it'll probably be another 5 to 6 year bear market when it gets there. However, if it breaks it and goes to 75 or whatnot, then it'll probably be a 6, 7, 6, 7, 8 year bear market. But if it breaks and then goes way up 100 or something, then it's over for the next 10 years. All right, Barrick. Gosh, you can't even load a chart correctly. Who cares about Barrick? But silver, 50. I mean, I'll start taking even more precautions. When gold at 3,000, I just sold, paid off all debts, and then I'll start really making decisions when it gets to 50. In terms of the stock market, and this is just what I'm doing, not investment advice. Don't invest because I make sure the decision's yours. If you're doing something because I'm doing it, then don't do it. Like, don't do it. It has to be your decision and do your own research and consult a financial advisor. I'm not one. But yeah, in terms of the market, let's do a year to date. What I think the stock market could do is this is 44, could come back up around here, or it could just come here and go down and keep going down. Go the S&P because I'm just more comfortable with that. Let's do a 5 year. So the S&P has been on quite a bull market, not even just in general. So it comes down here. It could go back up to 6,000 or it could even go up to 6,500. Who knows? But it could just bounce. I think it's due for a bounce, even if it's like 2 or 300. I think the last move will be when there's this massive stimulus, but I don't think it's going to last long. And I think gold and the miners are actually going to way outperform. I think most of that money is going to go there and not, and especially with the tariffs and everything, I don't think it's going to go. I think what they're trying to do is, Trump wants low interest rates. He wants QE. He wants to juice up those asset prices, and he's doing what he can to to do it. And firing people, laying off. Like I think he's doing that to get the economic data bad, sentiment bad, so the Fed will step in and juice up asset prices. But I think it's going to backfire. I think it's going to go into more resources, gold, and everything, especially. But anyway, 5 year could bounce, come down, and then after the stimulus, or it could just, I think it'll top out between anywhere 6 to 7,000. I know that's a big range, but uh, that's all. I don't think. But yeah, in terms of gold, the next target to know is silver at 50. I don't know what the gold price will be. It could be anywhere from 3,200 to 4,000, but anything. So that's what I'm doing. And stock market, I think some of that capital will go into gold, but we have a lot of problems coming in, and that will be very deflationary. So anyway, that's all. Hit that like button, subscribe if you haven't. I'll see you next video.